Hi, it's David here with Future Trading. I'd like to welcome you to the channel. Thank you so much for stopping by. I got a chart that I'm going to show you that I went over with my private community, minus a couple things that were up there and some things that I did share with them that I'm unable to share with you. However, because the chart is simple, it's not complicated, I want to show you the chart and have you use just a little bit of deduction. I'm going to give you a couple rules to look at, when you're looking at this information, and it's a single bar plot. And I want you to kind of have in mind going for 20 ticks, every day. Just something simple, nothing complicated, just waking up and doing 20 ticks, which is $99.21, and that's $2,000 a month trading. I'm going to show you this chart. And again, because what we do is visual, I'm pretty certain that you'll be able to deduce what it is that I have on the chart. And again, this is minus a couple other things that I was sharing with them, as well as a couple other tools I put on there that kind of help filter out some things. I got bored and made this tool, and it's really simple. It's a price action tool, so it's simple. So you'll be able to, I'm pretty certain you'll be able to pick up on what's happening. It's simple. All right. So before doing so, again, I have a lot of information here for you. This is the universal threshold, how far the market will pull back before resuming the price action trend. You just need to be able to count to 10, the price action method. There's three different ways that it show up on the chart. It's the majority principle, and it states that the minority is compelled to follow the universal chart scale. I teach you how to read your hard right edge, so you don't have to look left. You don't have to do it. All right, so this is the video. This is the video that I went over in that video, some things that I had told them. If you need additional education, I do provide that, as well as indicators. There's well over 300 of them, and you're more than welcome to each and every one of them if you want it. And it works on a free version of NinjaTrader. All right, so you can trade on the platform of your choice and just chart my tools and go from there. This is the chart. Let me do this before we move into that. This chart here. All right, so we had talked about that high, and of course, they went down a couple weeks ago, and then I came back about a week ago, and I told you guys, yeah, that they could possibly gap down. They did, They ended up gapping down. Price was here. They gapped down through that little block over here, came back up, and then of course they managed to move themselves up. All right, so for those that have the indicator suite, the blue blocks that you're seeing is in your map indicators. All right, so it's in your map indicators. You're more than welcome to apply that to the chart. That's in the updates. And this other little indicator here I have on the chart is just the push pro. You can use that as well. They were kind of in here on the bottom, and if you can get them to just trap the red, that'll be just totally fine. All right, so and this is what they did today. Stayed above the center of the chart. They ended up to the upside here, and these are those time ranges. You're more than welcome to that information. It's free and it's very robust. All right, I don't know if you had a chance to kind of actually see that. You just want to keep them above the center of the range or beneath the center of the range. It's just that simple. All right, nothing complicated. All right, so let's get into what it is that I want to show you. I don't want to be before you long. All right, and here's that information. Here's that information. Now I'm gonna give you a couple of rules. And again, look at the chart, kind of digest what it is that I'm about to show you. It's simple. Just two rules I'm gonna tell you guys. Two rules. Try to ensure that the market traps the dot. Okay, so you pushed up here, it pushed down, and there's a dot in this move down. There's a dot. See if the market can close above the high of that. All right, the high of that drop back. All right, try to go for 20 ticks. It wasn't there. So there's a blue arrow. All right, there's a blue arrow. And I did total. I did do a total showing you what's the losses and the wins. We'll get to that. All right, so that didn't work. All right, so we want to look for it on this side maybe. All right, so we're just going to turn it around. We're not even going to count the trend. We're not doing any of that. We're just going to turn it around. All right, so again, you want to see if you can trap. They were down, they went up, they came back, and they blew past the dot. They closed. Just go for 20 ticks. Okay, just go for 20 ticks. You can go for more if you would like, but just try to go for 20 ticks. Now, I do want to let you know that when the dot comes in, it's a single bar setup. So the moment that the bar closed, the dot comes on, you're more than welcome to go for the distance of the dot. So if you see the bar from high to low with the dot, you're more than welcome to give that a try. Will it work all the time? No. Here's an occasion that it didn't work. Here's an occasion that it did. All right. Here's an occasion that it did. So sometimes it's going to work if you go with the dot, sometimes it won't. And so in the times that it won't is what I'm showing you. So if it doesn't work, all right, you see the green dot comes in, they go past it, put the close beneath the dot. Just go that way for 20 ticks. All right. So everywhere you're seeing a blue arrow, okay, if you're seeing a blue arrow, that's a loss, right? And you're just trying to go for 20 ticks. You want to trap the dot below the high, or you want to trap the dot uh, below a high, or you want to trap the dot above a low. All right. So it's really just that simple. All right. So we want to trap the dot above a low. We have a low, we have a low, we're trapping the dot. Just go that way. Again, you can go with the dot, or you can go for the trapping of the dot when it goes wrong. So if you take the dot and it doesn't work, turn the position around. Just try that out. Just try that out. It's simple. All right. And as you can see, we're seeing far more winners than we are losers going, in the direction of breaking the dot. Can you go with the dot? Yes, you can. You can see that there's winners as well. So if you go with the dot, you can get that to work. Unfortunately, in this run up here, you only had that one in the second one. Well, actually, two here before they turned the corner. So you only had two, and then you had that third one up here, and they broke past it to get the market down. All right. So yeah, it can work. It can work to go with. Preferably, again, do it according to how it is that you want to interact with it. I'm only trying to put in front of you price action. That's simple. Nothing complicated. Again, anything with a blue arrow is a loss, where they closed beneath the green dot and they didn't offer you the $100, the $99.21 that you would need. Okay, so I put a blue arrow there just to indicate that that didn't work. All right, you're only going for the 20 ticks. That's it. All right, and again, if it didn't work, I made sure that I annotated that. All right, there's a lot of areas in here where you could have got the 20 ticks. It's just that simple. If you want to go with the dot, that's totally fine. Again, I want to tell you, if you go with the dot, just go for the distance of the bar. That's it. And so here we had 15 losers and 51 winners going with the breaks. So if they trap, let me go over that one more time right here. They push down, they pull up. You're looking for a close beneath the dot. Just go that way for 20 ticks. They moved up, they push down, they close above the high of that pivot. Just go for 20 ticks. And yes, you're very much able to go with the dot should you want to go with the dot. And there's a behavior to this, and I'm not telling you what that is. Again, pause the video, rewind it, go back through the chart, and you'll probably be able to detect what it is that I'm showing you. Okay, you'll probably be able to get it to work just by what it is that I'm sharing with you. All right, so we're just going to go with this high because that one kind of happened under that high. So let's just go with that one and see if it can keep going. All right, so that's simple enough. And again, that's just one of the indications here. And I covered that in the private community. I'm certain that they'll probably take a look at it a little bit later if they haven't done so already. But if you're new, hopefully you're able to utilize what it is that I just shared with you. All right, and it's simple. It's simple. I want you to take your time, rewind the video, go back and look at it, and it's really, really simple. Let me see, can I get us another chart here? I'm gonna see, can I get us another chart that has the fundamental information on it. All right, so here they bouncing off the center of the chart. I'm not going to do this long, probably just about 2 or 3 minutes here. And I just want to go over the pieces, the thing that makes it work. All right, so here you got to have seven. 1, 2, 3, 4, 5, 6, and that's seven closing lower. All right, now this is your trend aspect. All right, I'm just going over the trend. All right, you want to see, can you get them to go the distance of the trend? All right, you want to see if they'll do it. Do they have to? No, they can turn back around. They're above the center of your chart. We'll talk about that in just a moment. So they can turn back around, right? So if you use this information in conjunction with what it is that I just showed you, you may have better odds. 1, 2, 3, 4, 5, 6, and 6, and that's 7. All right, so now they're trying to trend back up. It can't be both. I just want to say that it can't be both. So they must do one or the other. All right. I think it's likely for it to go up still. Came down to the center of the chart and they made a trend back up. And yeah, combine both of those things together, it It could possibly work. Can they come down here to where the trend originated from? Yes, they can. So let's just kind of do this: one, two, three, 4, 5, 6, and that's 7. All right, so that's 7 there. So you would just do this. We're just kind of waiting. I know we're at like 4:38 here. It's a little later in the evening. All right, so with the other chart that we were just looking at, we said, hey, they broke above the dot. So I'm gonna just kind of throw that in there too. All right, so we're just wanting it to go 20 ticks in that direction. Let's see what we got so far. $65, $40, and not quite there. They would need to go up just a bit more, and then of course that'll be that 20 ticks. All right, so now, so yeah, they'll be leaving the center of this trend because the center of the trend is like back here. So if you're having a trend, clearly the center of the trend is important, which the center of the trend is like the upper part of the scale here. The center of the trend is here. It's like you and I, whenever you have a thought, you have the end in mind. So you know how far you're willing to go to get your idea to work. The market does the same thing. It does. And so you just need them to tell you what's on their mind. That's it. And so the moment that they tell you what's on their mind, try to go what it is that they're suggesting. That's all. If they're suggesting to move higher, go with them. All right. It's just that simple. Don't make trading difficult. When the majority kicks in, these are the three different ways that it happens. All right. So we need a larger wick, smaller wick, a smaller body, larger body, or the mid exceeding the prior bar, the live candle. This is your live candle exceeding the prior bar. When that happens, a pressure will come on indicating it, but you can just look for your mid. All right. And then there's a wick zone. All right. There's a wick zone to every bar. How far the live candle should pull back before pushing away. It should pull back before pushing away. That's your wig zone. All right. That's what those two black lines on the candle is all about. They're getting the mid above the prior candle, and these indications are provided with you. And the increase, the IN indicator, all of these indicators up here are provided in the indicator suite. All right. So you get all of these indicators here, along with the one that you just saw on the other chart. Well, all the charts that I have on the channel, you can have them all. $100. I'm trying to do something. I'm trying to give stuff away. But that increase indicator is trying to highlight the wicks and the bodies for you. It's trying to find that for you. All right. It's trying to do that. The bar color is doing this. Okay. So it's doing, hey, this bar exceeded the high, this bar exceeded the low, and it colors the bar and tell you, hey, this is your stop bar. So you put this information in conjunction with the chart that I just showed you, it should, just affect how you look at it just a little bit. We may have reached that $100 mark here. Let's see how much money. It's 55 in that bar. Yeah, so yeah, we probably did get there. So yeah, but it's saying that it wants to come back this way, which is totally fine. Again, the center of your trend is back here. You have a center of a trend up here as well. Okay, there's the 7 bars down. That's the upper part of the chart. The cool thing about this, and I want to say this to you, it's in front of the candles. So you don't really have to look left to know where the market will turn at, per se. You don't have to. You just count the trend because it would help to have some context. That's all. Are we trending back in this direction? That's all. Or are we still, going to honor the trend from here? So respectfully, you can end up getting trapped, if you will, between two trends, and your price activity will look like this. Okay, because the center of this trend here is from above, and this is the center of your trend here from below, and they can end up just kind of stalling you out, having you thinking that it won't go up, okay, or possibly that it won't go down, and you'll get trapped in here for who knows how long. That's all. Who knows how long until they decide that they want to get here. I think it's likely that they can get here. I do. Or we can go with the center of the trend down here off the bottom, which I doubt they'll want to get this low. I doubt they'll want to do that. But that's down here near the lower portion of the chart. All right. So you would just have to see. I can't hold the video that long. But these are the components. All right. These are the components of the things that you would be looking for. Again, the prior chart that I showed you, and I'll show it to you just one more time. The prior chart here It's just some information that I covered with my private community. Again, there's a couple things that's not on this chart. There's some rules I definitely can't tell you, but but because of what I'm showing you the potential of how to spot the professional activity. It's a way that the market behaves. It's a behavior to it. The moment that the bar closed, you can go and take the trade in that direction with the dot if you have context. Or if it doesn't work, okay, because they do a lot of cyclical back and forth. That's what they do. If it doesn't work, I have you know there's still an opportunity available for you for them to still reward you in that direction for something reasonable. You always need to go for something reasonable in the market. Don't be excessive. Don't try to take a 1 minute chart and hold it for the whole day. Don't do that. Don't try to take a 1 minute chart and hold it for 3 hours. If your risk parameters, and I want to say this to you, if your risk parameters is something of a 1 minute chart, your target needs to be proportionate to your risk parameter. You cannot try to take a 1 minute chart and ascertain a 2 hour trade out of a 1 minute trade unless you're skilled to do so. All right, just want to say that because some of you may take trades, be net positive, and demand more from a position on a 1 minute chart that that 1 minute pivot can't house 2 hours worth of activity. Okay, so that may be impacting your bottom line. You will want to go for something reasonable. All right, just want to say that to some of you. There may be someone listening that needs to know that. So whenever you take your trade on a 1 minute chart, 2 minute chart, 5 tick chart, whatever your time frame is, okay, try to be reasonable about your exit. Okay, don't let trades give you money and you're still kind of basing it on some other time frame. Each time frame takes its own, its own direction at its time. Okay, because remember the market is a fluid event. It's not staying still based on your time frame. So it may say, hey, for your time that you're taking this trade on this particular price level that they're interested on, they're willing to push price this far. But in the next X amount of minutes or X amount of ticks away, we're looking to bring price back in that direction for a sustainable amount of time that's clearly outside the scope of your risk tolerance. Be reasonable in your trading. Just be reasonable in your trading. I wish you all the best with it. Take care.